Hello and welcome to Car Dealer Live. I'm James Batchelor, and today we are taking our monthly look at the new and used car markets with Auto Trader. Joining me is Auto Trader Director Ian Plummer. Hello, Ian.
Hi there, James.
Always good to have you on, Ian. Let's start, if we may. The last time I spoke to Auto Trader, it was with Catherine mid-December. And it feels like it hasn't exactly been quiet since that chat. It's been incredibly busy. I think January is normally a bit of a quiet month for everybody, but it doesn't seem like that this time round. From your perspective, how has 2023 started?
Well, firstly, completely agree. My own perspective and everybody I speak to in the industry, brand side, retailer side, seems to be saying the same thing. It's busy, but generally good busy. That means good activity levels overall. I mean, as Catherine would have told you, December was looking good, and December finished pretty positively for everybody. And we took that momentum with us, I think, as an industry into a good January. So we finished December, I think, with sales up around 6% on 2021 levels from what we can see in our own proxy sales data. So that's a good sign. And it's the first positive growth of used car numbers that we've seen since about March, I think, of 2022. So good to see. Consumer appetite back then was good. We had 10% growth of visits on Auto Trader compared to prior year. So again, very good. But we're seeing that flow through into the current year. And despite the sort of doom and gloom that's out there, you hear obviously a lot of understandable economic sort of concern and malaise out there with negative numbers of various sorts. But it's not as bad, as we tend to maybe believe or allow ourselves to believe when you look at some of the numbers at least. So the ONS number said that the economy actually grew a tiny bit in November, and that was ahead of expectations. The employment level stays very low at 3.7%. Consumer confidence is actually growing a little bit from a very low number. So it looks relatively good when you look at the macro numbers going into January. And on our marketplace, that stable position of December that I mentioned flows through into a positive January. So we've got a month number so far for January that shows visits up 15% on prior year. So that's great growth of more people showing engagement in car buying. Maybe we come on to the reasons why in a minute. And we're seeing the retailer research that we've done. We're seeing a lot of positivity from our partners there too. So in January, we ran some research, had about 500 responses from different retailers, and 75% of dealers said they're confident they'll perform as well, if not better than last year. All of that's feeding into a lot of positivity you then see in the data. So our proxy sales data that I mentioned for December a minute ago being up 6%. Now for the first week of January is up 9.2%. A great start so far from what we can see. And again, the data for users coming onto our platform is very positive, around 15% up on prior year. Really positive signs. Pricing is stable. Despite, again, some noise out there, you sometimes hear the noise and the vibe being maybe negative, but the reality is quite positive so far, month on month, with 0.4% up. So days to sell are good, in line with pre-pandemic times and so on. And lastly, just car buyer sentiment. When we ask people the questions we often refer to on these webcasts and others, how they feel about their own confidence in buying their next car, more than 8 in 10 say that they're at least as confident as they were a year ago. Actually, within that, the number is growing of those who are saying they're more confident. 46% of people are more confident than they were a year ago, which in the context of admittedly some people feeling inflationary fears, issues really hitting them quite hard, there are clearly a lot that aren't seeing that and do see a good opportunity to buy a car. And 3/4 are still in the market to buy a car in the next 6 months, which is a number we've seen very stable over the last 3 years or so.
Well, one of those reasons for strong consumer sentiment, it must be what's happening with public transport at the moment, because of course we saw this right at the beginning of the pandemic, didn't we? When consumers are they're doubtful about using public transport, they're a bit scared or they're a bit reluctant to, they turn to the used car market, don't they? And we're seeing that at the moment, surely, with all the strikes.
We're definitely seeing the effect of the public transport issues being cited by 1 in 2 buyers as being a major reason why they believe that car buying is a vital step for them, and it's not a discretionary purchase they can choose to do. They need it. All the more so when the trains are unreliable and so on. I fortunately took one up to Manchester today where I'm speaking to you, coming from my London base. It was on time today. I think in the last few months, it's one of the very rare occasions where it's been on time or not just cancelled. So that's denting consumer confidence in public transport. Not a great thing for the UK overall, but it is driving a level of interest in car buying for sure. It's one of the many factors that are, I think, driving positive consumer sentiment just now.
And of course, it's an obvious thing to say, but once somebody has turned their back on perhaps their season ticket, they've looked at the high prices of season ticket for the trains going up in the next couple of months. They've considered buying a used car and they've done so. It's very difficult to get that person out of that used car in a few years' time, isn't it? Once people have got back into a car, they want to stay there, don't they?
Well, that's one of the big benefits of the way we sell new and used cars in this market. We have a great cycle of renewals that we work on, I think, as an industry. So the vast majority of people buy a car on finance, 9 in 10 buy their new car on finance. It used to be about 4 in 10 buy their used car on finance. That's grown to more like 5 in 10 in the last year as finance has become ever more ubiquitous, actually, in the way we buy cars. So once you're buying a car on finance, most of the time, not in all finance products, you're in a cycle where you probably need to renew in, let's say, 3 years' time. And if the retailer is doing the job that I'm sure they're all focused on of contacting proactively those customers, and if those cars are in a good equity position, which fortunately right now they usually are, it becomes a very positive renewal discussion and opportunity for the retailers out there, for sure. I think there are other factors driving the consumer sentiment, the positivity that you mentioned right now, though. So we look at various sort of macroeconomic data points and that we think drive the bigger picture of car buying sentiment. For example, there are still 500,000 people waiting for a driving test just now. We know that the younger population are, despite some of the media sort of speculation to the contrary, very interested in buying, owning, having access to cars. That disruption in public transport factor you just mentioned, for sure. But I think the fundamental one that drives most of our confidence in the market is the fact that 5 million people have not been able to do that renewal of their car in the last couple of years because we've lost roughly 2.5 million in new car sales numbers, of roughly 800,000 less new cars sold compared to normal times, with a 1.6 million market for the last 3 years compared to the normal 2.4 average. So those people are delaying a purchase, sometimes for their personal choice reasons, but often because they can't get into a vehicle. The leading times are too long. And so they are still sort of lapsed customers, pending customers. And I think a great source of opportunity for us to take going forwards. But also fundamentally, James, you've got people who are in employment. And if we don't see cars as discretionary in the same way we might see our Netflix subscription or going out for certain sort of social activities and so on, because we need it to get to a job that we've still got because that unemployment level is so good, then since around 3/4 of people actually use a car to get to work for either all or part of the journey, cars are part of what you need to actually still function, to get to work, to manage your family and so on. So I think there's undisputedly there are some challenges in the economic context, but for car buying right now, we're in a very different context than any other downturn. And the car buying context is not in the same sort of cycle as the rest of the economy. We're in a supply-driven context today and going into 2023 in the same way we have been in the last few years. So it's, compared to the great financial crisis where we had excess supply, factories turning out cars very quickly, dwindling profit margins and dwindling prices, high discounts, high marketing. We've got none of that. That will return to a degree, I'm sure, over time as things normalize, but I think we're still optimistic that supply is constraining things and demand is still very robust.
Yeah, well, that sort of dovetails with my next question, really, which is, we've established that January started off pretty strongly. Do you think this can continue during the year? Because, of course, we are expecting, I think we're pretty much agreed that supply is probably going to come back late Q4, something like that, possibly. Do you think this strength can continue during the year?
Well, I think that from a used car perspective, it's if I talk used cars first and then maybe new. From a used car perspective, we're definitely seeing the challenge of the supply sort of shortages. So as I said, if we've had 3 years roughly of a third fewer new cars being built and sold, that feeds through into the 0 to 3 year park and the 4 year park and so on, with a third fewer of those cars. So we have seen lower used car sales numbers in the areas, the buckets, if you like, of aged car ages, where there are fewer of them. You can't sell what you don't have. So the 0 to 5 year old market has been roughly a bit more than 20% back in terms of supply and about 20% or so back in terms of sales. The opposite has occurred in the plus the 5 year old age brackets and so on. So that will limit, I think, the growth numbers in the market for used cars. You can't actually source some of these more recent vehicles. You will miss a tranche of customers, and it will slow things down somewhat. But fundamentally, I think the market performance, the world being driven by supply, it's buoyed by the type of demand that we're seeing at the moment. And retailers are turning cars effectively, focusing on the right data metrics to turn cars quickly. I think they can sell the cars that they've got and keep on filling the back end effectively. That will, in some cases, mean that dealers need to be stocking older cars than they were used to, particularly those at the franchise side of the market who are used to selling the more recent vehicles in particular. But fundamentally, I think it's still likely to be a relatively good year. Not probably maybe as euphoric as maybe the last couple of years has been in terms of record levels of demand and often record levels of profitability, but a very good one, and probably ahead of where we would have been pre-pandemic in terms of both sales numbers potentially and notably profit. And that's hopefully going to be fed by a new car market, which will likely be up somewhat on last year. We're expecting something around 1.8, 1.9 million cars, up on that 1.6 we've seen in the last 3 years consecutively. So that's around a 20% increase, but it's still 20% or so back on where we would have been in 2019 at around 2.3 million. So it's good. It's not huge. That also does improve the remarketing channel sort of fluidity for used cars. But I think in new cars, we've got a different context of a cushion of an order bank that's going to help us get through the start of the year from maybe a downturn point of view, an inflationary impact point of view. As you mentioned, as supply maybe comes back by the end of the year, hopefully at that point, demand also continues to go upwards. We might have used the cushion of order bank to keep ourselves going, deliver good margins on the cars we've already sold, and get to a strong outturn to 2023, hopefully.
Mm-hmm. Ian, one thing we've seen this month is the Tesla announcement of major new car price cuts, but also the realization of something that we've been keeping our eyes on for the past few months, and that's falling prices of used Teslas and also EVs. Two questions, I suppose. Firstly, do you think the Tesla bubble is bursting? And secondly, are falling prices of EVs a temporary thing and something that dealers should be worried about?
Firstly, no, I definitely don't think the Tesla bubble has burst. They are still accounting for around twice as much as the rest of the EV market combined in terms of our used car performance. So they are really attracting a lot of eyeballs. I think what they did was brave. We'll see whether it goes as far as risky in terms of residual value management. But it does then definitely create a level of interest in the consumer's eyes for the new Tesla product. It may dent the confidence in the used Tesla product, which is the challenge I think we'll no doubt be talking about more. We'll be able to come back to you on the point around actually the impact we're seeing in terms of valuations on those vehicles. We're obviously monitoring that very closely, like we do for all of our data points on all cars, of course, but that one's a particular talking point right now. And are we seeing denting demand for electric vehicles overall? Right now, yes, there is a faltering of demand for electric vehicles. That's been apparent for the last couple of months. And it's been largely brought about by the increase of energy prices at the time when actually fuel prices have come back down. We used to have fuel prices above £2 a litre, and now often we talk about £1.50 a litre. Energy prices the other way around. There's a vibe in the media and in the minds of many users that actually all of a sudden we've swung to electric vehicles becoming more expensive to run than ICE vehicles. That's still definitely not the case in broad data sets, comparing many cars in what we believe are realistic comparisons. If you take an individual car and look at the most expensive charging, then clearly you might find that case here or there. But fundamentally, for every 1,000 miles you drive, we see an average of £125 benefit for an EV over an ICE. But that kind of gets drowned out. So it has had a little bit of a dampening effect in terms of demand just recently. You also had people at Christmas driving longer distances and maybe struggling to charge. And we had a few newspaper articles, didn't we, that talked of Tesla owners being surprised then to queue. Charles Corrin talking about his issues driving electric vehicles. That creates negativity in the market. We are seeing that. We reflect that, obviously, by seeing so much car buying demand. We obviously reflect whether people are voting with their feet or at least their mouse. They click on something or not. And there is a dampening of demand. I think we need to get back into the positive opportunity that electric vehicles represent, and as an industry more widely rebalance that discussion, to be frank.
Mm-hmm. If we just look at the more immediate future, I mean, we're fast approaching the March plate change. There's not too long to go. Dealers are, in theory, their order banks are pretty full. I mean, of course, it's one of the busiest parts of the year as well. So, I mean, given the challenges with supply, do you think March is still going to be a strong month for retailers? Because the past couple of years, March has been a bit of a dampener, hasn't it? So, I mean, do you think we're going to get back to March being the most important month of the year?
I think March will still be an important month, possibly the most important, but I think you've definitely seen a flattening of the market, because if you don't have an available bunch of cars that are in stock with an urgent reason to, as a consumer, to get hold of that car because it's got a new nameplate on it and it's probably got a slightly better value thanks to that, then what's the point actually focusing on driving a sale in that period? You can't, because you're waiting for a car often for many months, and you're happy when it does turn up. You don't really care whether it's this month or whether you had it available. I don't know, in February. Would you wait for it still to come through in March? Maybe, but if you've been waiting maybe 7-8 months, perhaps not. You just want the car. But I think there's definitely a flattening, and the lack of available deliverable cars is driving that flattening. We're building to order and then satisfying demand as we can. I think what you're seeing these days is actually a Tesla month. You saw it in the month of December. I forget the exact percentage, but I think Tesla reached around 13% market share in the month of December, which is crazy. But they're doing extremely well in driving a lower single-digit percentage number for the full year. But that's a powerful effect. And I think people are now talking about a Tesla month, which is when the ship comes in from Shanghai and the orders can be satisfied. And they really do affect the market. And therefore, the bubble has definitely not burst, in my opinion, going back to your earlier question. So I do think there's going to be a flattening of the effect of the peak months of September and March. But I think fundamentally we're seeing stock coming back a little bit in the market. We're seeing around 50% more cars on our platform, new cars, than we had a year ago. So it's a good sign. We're seeing plenty of engagement in that stock. So if you have something available or very near time available, that is definitely a distinguishing factor for your product. And MG, I'd call out here as being a winner in recent times. Everyone, I think, has talked about this quite openly, that they have had good availability of some very attractive cars that are very well positioned price-wise, and that is helping them to benefit from the dearth of available stock that other brands have got. So it is definitely a winner to have an available car or a near-time available car.
Yeah. So, Ian, how is Auto Trader responding to all of this turbulence in the market at the moment? I mean, how are you assisting dealers with some of the challenges that they're going to be facing over the next 12 months?
Well, I think there are three main things that we're focusing on right now. We're continuing to invest in our platform to drive audience, to drive car buying engagement, and to make sure that we're doing our best to deliver huge value to our retailer partners, brand partners alike, and so on. So you may have seen a new advertising campaign that was launched, I think, on Boxing Day, that's aiming to reach around 99% of the UK's adult TV and radio audience, over 14 times, in fact. So it's already well on the way to achieving many of those objectives. That's no doubt helping to drive some of the early audience numbers that I touched on earlier. But continuing to make sure that there is a lot of car buying engagement and intent. People looking at the adverts of all our retailers is number one concern that we believe is our primary objective as Auto Traders, to drive value into our marketplace and our customers. The second point, one we've been focusing on for a little while now, around unlocking the value of data and providing our retailer partners in what is clearly an increasingly complex and also extremely competitive market, with data that helps them to respond quickly and strategically to that fast-changing dynamic that we're seeing. And when you've got this increased complexity in the car buying market, you need data, and you have a need for speed and agility. So we believe that that's fundamentally critical to power the success of our dealer partners. And so we're empowering that by, regardless of size, enabling more of our data through the existing packages of our customers. So if you're on Portal, for example, you can get now our valuations data, our retail valuations data, which will help you price position your product alongside what else is in the market in your local area. We've just announced the launch of Vehicle Insight, which gives a really an innovative look to the new performance insight tool that we're making available to retailers to access our powerful market data in one simplified view, make it easier, more efficient to actually use that data and action it. To give you an example as well, James, in the last year, we saw considerably more price changes than we ever saw in previous years, way more than we saw pre-pandemic. More upwards, but obviously also more downwards. What we're seeing, I think, is the use of data to power success. Retailers use that effectively because they actually cut typically the prices of their cars on average, if you take percentage terms rather than pounds and pence, by a little bit more than 1%. Pre-pandemic, we were cutting by fewer times, but chunking reductions on cars by around 2%. But retaining 1% of margin by changing your pricing more often, smarter, more easily, more efficiently, is definitely driving value into our partners. So I mentioned the portal customers; they've got access to a simpler system, unified data, and so on. The larger customers that use our data through APIs have got the same ability to use our Auto Trader Connect system with the Retail Essentials to create, manage stock, power some of their own solutions on their own website, manage changes to the vehicle data in real time if the car's prices have changed, images have changed, have been reserved, and so on, that kind of thing. So it's really making things simpler, making things more efficient, and enabling speed of sale, which we know is fundamental to driving profitability to all of our retailer partners. I mentioned 3 things. So the last one quickly is continuing to reflect the evolving marketplace, the desire, the taste of consumers to do more digitally. So we've empowered more of those solutions already in the last couple of years. We're enabling more of that through the implementation of more of our digital retailing strategy, available to all retailers of all sizes, to allow what we know is relevant for consumers. In other words, doing more things more digitally, but still connecting with their retailers, so you can see the retailer's car, retailer's finance, and enable a flow through into a physical journey, which we know the consumer still enjoys with their retailer partner.
Ian, fantastic. There's some really interesting stuff there. So thanks for giving up your time today.
It's a pleasure. Thank you, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.